Sweden's central bank kept its interest rate at 1% today, widely predicted by many analysts. The country has recently suffered a hit to its precious export market, though, as the European financial crisis tightened its grip in 2012. With slow economic growth and inflation still off target, is this the end of rate cuts by the Riksbank for the foreseeable future? Well, joining me on the line is Robert Bergqvist, the Chief Economist at SEB in Stockholm. Robert, thanks for joining me today. First of all, presumably you'd agree that holding rates at 1% is the right move forward by the Riksbank.
Yeah, I think it was the right decision because we have, I would say, some challenges when it comes to credit growth. If you look at household indebtedness in Sweden, it's fairly high, and of course, if you continue to cut interest rates, that could create problems in the future. But could also say, on the other hand, if you look at the macroeconomic developments, if you look at the inflation outlook, there are arguments for the Riksbank to cut interest rates, but due to the uncertainties for when it comes to credit growth, I think it's reasonable that the Riksbank keep the policy rate at 1%.
But some analysts say one of the main reasons not to cut rates this time round is down to the central bank seeing brighter times ahead in Europe. Given that inflation is below target and unemployment has been steadily rising, don't you think a rate cut is imminent?
I think that, as I said, it's a very good argument for the Riksbank to cut interest rates because the inflation is not a problem and we have unutilized resources in the Swedish economy. But then you have this kind of new challenges for central banks. How should you incorporate what's happening right now in the credit market and household indebtedness? And of course, this is not a challenge only for the Riksbank, but it's a challenge for many central banks around the globe, how you should balance price stability against financial stability. But for two central banks, especially in the Nordic area, Sweden and the Swedish central bank and the Norwegian central bank, we have more challenges, and that is that we have still very strong housing markets, you have rising credit growth, and I think that as long as you don't have more instruments to deal with credit growth that could actually slow down credit growth, I think that actually you have to use the interest rate to slow down credit growth and reduce the risk for future imbalances.
So what you're saying is this now leaves room for a cut in the near to mid-term?
I think that the Riksbank is a bit dovish when you look at the monetary policy decision today. And we think that there is a probability, there's around a 30% probability for a rate cut in connection to the next rate decision in early July. And of course, the Riksbank must also take into consideration what will happen with other central banks around the globe, and especially what will happen in Europe. And the most recent signals from the European Central Bank, that is that they are apparently prepared for taking further steps to provide more support. And then we have also the Norwegian Central Bank suggesting a 50% probability for a rate cut in the second quarter. So the Riksbank must take that into consideration, because if the Riksbank just continue to keep the policy rate at 1%, then we're going to have some problems with the Swedish krona, the currency. That the krona could become too strong if the Riksbank conduct a kind of tight monetary policy on a relative basis.
Finally, Mr. Bergqvist, just looking at Sweden's exports for a moment, it's been hit hard by the European financial crisis recently, and we know the country relies so heavily on exports to the Eurozone. Is a recovery in export growth likely, and what might happen if growth is too slow?
I think that we are going to see several challenges for Swedish exports for the next 2 years. The first one, that is, of course, that we expect very weak economic growth in Europe. And our export to Europe accounts for roughly 70 to 75%. So weak exports or weak economic activity in Europe will have negative implications on the export outlook for Sweden. And then, of course, on top of that, there could be some risks with a strengthening of the Swedish currency. But I would say that the currency, if you look at the currency levels right now, I wouldn't say that it's a problem for the Swedish exports. I think that the Swedish krona is quite close to, fair values. So I think that the Swedish economy, the Swedish export sector, we can afford a slightly stronger currency. But of course, if you have a combination of a strong currency and also weak economic growth in Europe, then of course it's going to be a challenge for the export sector, and that means that to get economic growth in Sweden, we must rely on domestic demand. And I think that if you look at the different driving forces in the Swedish domestic economy, I think you have quite good arguments for strong growth going forward. And so that means that we can actually, if you can say so, afford not a very strong export for the next 2 years.
Okay, thanks for joining me today. That's all for now from me. Don't forget we've got plenty of coverage and exclusive interviews on a couple more central bank rate decisions today, including the Bank of Canada and Bank of England. Just go to the website at dukascopytv.com. But for now, goodbye.